We're seeing investors starting to get concerned that the real estate market is a bit frothy, similar to the run-up of 2005, 6, and 7 that led to the crash in 2008. Warren, in 2012, you told Becky Quick that if you had a way to easily manage them, you'd buy 100,000 houses and rent them out. How do you feel about the real estate market today?
It's not as attractive as it was in 2012. We're not particularly better at predicting real estate markets than we are stock markets or interest rate markets, but there's certainly, and it's driven to some extent by these low interest rates, but there are certainly properties that are being sold at very, very low cap rates that strike me as having more potential for loss than gain. But again, if you can borrow money for very, very little and you think you're getting into some very safe asset, 100 basis points or 150 basis points higher, there's a great temptation to do it. I think it's a mistake to do that, but I could be wrong. I don't see a nationwide bubble in residential real estate now at all. I think in a place like Omaha or most of the country, you are not paying bubble prices for residential real estate, but it's quite different than it was in 2012. And I don't think the next time around the problem is going to be a real estate bubble. I think that it certainly was the cause in a very large part of what happened in 2008 and 9, but I don't think it will be the replica of that. Charlie?
Nothing to add.
Okay.